Good morning, everybody. Good afternoon to my friends in Europe. I am Mark Sebastian, your only option. I'm joined by Andrew T. Giovinazzi, the Viking of Volatility, and of course, Hans J. Albrecht, our Imperial Overlord of Income, and our resident Canadian international trade expert. There you go. So today we're here to kind of update you guys on everything you need to know about the tariffs, where we see the opportunity, what we think is going to happen, how things play out. So let's dig in. All right. So here's the skinny. Tariffs between Mexico and Canada and the U.S. have been delayed for 30 days. Trump got the little party favor that he was asking for from the different governments and agreement to sit down and figure things out. And that was enough to get things delayed and get people talking. Now, where things are interesting and why vol's still a little bit higher, why markets are not already at new all-time highs is we're already running a bunch of tariffs on China, a ton. People are like, wait a minute, why are we slapping 25% on Mexico and Canada and only 10% on China? Well, we were already charging like 25% on almost all Chinese goods. So this was bumping some of those up to 35%. So this is what people are watching and what people care about. There is a phone call with President Xi of China coming. I have a feeling.
It's going to be beautiful. It's going to be very, very beautiful.
It's going to be the world's greatest, most spectacular,
most beautiful
phone call.
Perfect phone call.
Yeah, exactly. So this appears to be a power play to force players to the table to, one, acknowledge him. All right, acknowledge me. And to get a process to get some long-term talks going. I don't think there was ever any intention for any of these three to be held for more than a few days. I would argue that this trade war was the shortest trade, the trade war between Canada and the United States. What might have been the world's shortest trade war. It did not last long.
You would think everybody, like, how can the press not figure this out already? Like, I mean, this is nothing different than,
You know it. I know it.
Boggles my mind.
So now, if things get messy again, obviously, it would be nice if Canada would get a parliament. It would be helpful if they would. One of the issues with all of this, and Hans, maybe you can speak to this, is Canada currently does not have it has a prime minister, but he's kind of a lame duck, right?
Yeah, what's going on over there, dude?
Hans, you're muted. You're muted, Hans.
Justin? He's Canadian. We try our best with him.
Yeah.
We try our best. We bring him along, trying to diversify.
Check.
There he is.
There he is.
Oh, you didn't hear my joke earlier. Okay, so I'm going to do Trudeau on the phone with Trump. Hi, my cat's breath smells like cat food. Pretty much our guy up here. Yeah, he's lame. And there's nobody at the helm right now. It's too bad. We were gearing up for a big war. We had our maple syrup catapults ready at the border, like we were lining them up. And we were like, this is going down. And then it just ended quickly. So it was a bit of a letdown in the end. There was almost some drama there. But yeah, I mean, it wasn't great timing for Trudeau. I don't think his heart's in it anymore at this point. So we need a new leader. But look, it made sense to me that this was going to get sorted out. We know what a huge partner, a trading partner, Canada is. You're going to shoot yourself in the foot. That's the thing with, well, I'll get my piece in a moment, but we're integrally kind of connected to the U.S. Economy, and so it didn't really make a whole lot of sense. So you're right. We could see this ending pretty quickly.
Yes. But once Canada gets their political situation figured out and holds elections, then I think, hopefully things will get moved along quicker then. Yeah. But there's always the possibility that things could flare up. The Mexican government is relatively left-leaning, which could create some problems. And I think Canada needs to figure out who their leadership is. So I never thought I'd say, there's definitely balls in the air in terms of negotiation, but I do think things are going to be cooling. Key to watch: phone call with Xi. Pay attention to that. So yesterday, and this was pretty easy to, yeah. Pretty simple to see. We opened on the absolute lows. Then, word started to leak. Oh, maybe this isn't that bad. And we rallied and, things kind of normalized. Overnight, futures rallied, kind of gave it away on the open. And now we're right back to where they were when I took this picture last night at 8 o'clock at night.
Oh, you're right.
So we So we are basically at the highs of yesterday right now, which was Monday, the 3rd. And now the question is, do we make that breakout? Do people feel confident that things are a temporary result between Canada and Mexico? My guess is yes. And that, the Xi discussion is going to go the same way. And my guess is yes. So where does that leave us? Well, let's talk about this Canadian response. We more and more with the United States and really all of North America trying to become more, call it regionally independent for resources, and obviously banking and a couple of tech companies, Shopify, Toronto, the Toronto Stock Exchange, the S&P 500, basically of Canada. Well, it had a wild day yesterday too, and has had kind of a wild month and maybe a surprising month. So Hans, what are we looking at here?
Yeah, we had that reaction. The Canadian index is very bank and resource kind of weighted, right? So that's it can be a positive, it can be a negative. In this case, it's a little bit of a negative, of course, in the face of huge tariffs. We're massive exporters to the U.S. And from a banking perspective, we are very, very a very indebted nation. Personal debt levels very, very high. And the prospect of big tariffs could really be negative for the banks because, bankruptcies, loan losses, things like that. You got a lot of people kind of operating at the margin, and that would have been a big impact. So the banks reacted very strongly. I don't think they've recovered entirely. So we'll have to see if that happens. There's still some question out there, perhaps maybe a bit of a volatility echo, as we kind of sometimes say. There's sort of a little kind of echo after the storm. But yeah, this could be a very, very big thing. And from a Shopify perspective, I was kind of looking at that one thinking, there was a rule that Trump was going to turn around that said, there was this loophole for people selling products under $800. So you think about Shopify's business, there's an awful lot of people doing that kind of thing, selling little items. And if you suddenly I don't know how this logistically works, but if you suddenly start slapping tariffs and all these little things, that's going to have an impact for this kind of small businesses, the small business side of things. So yeah, it could be really ugly.
Yeah, well, what I thought was interesting was with all the jibber jabber, TSX is up month over month.
Yeah, a little inflationary
that might be
push
a relief
there
from Trudeau, the Trudeau relief rally.
That's true. A little bit
I'm
of a
not trying to be
relief.
political, but there's a little cause and effect, maybe. Trudeau out, TSX up. Just what it is.
For sure, a little bit of hope there. Our dollar kind of rallied a little bit, but then it took another hit again, of course, with the US dollar being so strong. And in Canada, we're kind of, things are a little bit more difficult, little touch and go from an economic standpoint. So we kind of have to lower rates. So it's this sort of differential between the bit of higher for longer in the US versus Canada is definitely hurting our dollar. So there's definitely some challenges there. So we don't need this. We don't need this sort of this disruption and this drama.
I will say it is a good time to go visit Toronto or Montreal or some of the worldly cities of Canada, because your dollar goes the farthest, I think, that since like 1999, 2000. I mean, that's what we're talking about. So, US, this is a good time to go visit our friends up north. Plan your trips to beautiful.
Yeah.
To plan your trip to the fourth largest city in all of North America, Toronto, Ontario, for the April-May timeframe. It's a beautiful time to be in Toronto. Anywho, the TSX, yeah, it is interesting the way it's trading, and I kind of like TSX if we get through the trade war. I think the investment in Canada between uranium, oil, nat gas, and the precious rare earth, Canada is going to be one of the most important investment vehicles, I think, over a 10-year period, if the demand for energy and rare earth is going to be as high as it is. So let's talk about our different takes. And Frank wishes we were going to have him call in on his cell phone. He's in Washington, D.C., rubbing elbows with the high and mighty up on Capitol Hill.
So
he's like
Andrew, testifying in front of a committee or something like that.
Yeah. Since you run capital gains with Frank, why don't you take us through Francis's picks and what he's looking at?
All right, hold on. Let me get my thingy up here. Okay, yeah. So let me get this so I can see. All right. Against some things in inflation, fruit, defense, and for us, we're like drones. KTOS is our favorite drone stock.
Okay.
In that area. So that's we'll call it tariff proof. So buy on dips. We just had a 46% winner in there. Buy on dips. KTOS, probably that would be the name that would replace replace fighter jets and stuff like that faster than later. Also, solar being
I'm gonna get you a dad. It's gonna say dad bod, but the bod is gonna be buy on dips.
Buy on dips. There we go. We need some swag, dude. By the way,
yeah,
we need some t-shirts and some hats. I know everybody in class wants CTS hats. CTS hats are going to be the thing.
Yes.
Anyway, so also we'll look, and in capital gains today, we will be looking at First Solar, see if there is something there. So again, he likes solar being able to compete a little better, but again, with the tariffs going off. Anyway, overall though, domestic industries under Trump should do well per Frank. Anyway, imports, things maybe that won't do so well, Mexican beer, stuff like that. I think there's a Mexican beer company maybe we'll take a look at as well. And those are from Frank right now, but again, things have dissipated somewhat in there. RCAT still like RCAT. I like selling puts in there. So basically buy on dips, PJ Jones. So that would be RCAT's the secondary. KTOS is still, RCAT is more, it's a more speculative stock. KTOS is a earnings behemoth, growing, like small growing, but very good. No Mexican beer. I know. I have to give up Corona, which is actually the worst one is Dos Equis. Best beer ever. But anyway, these are just my personal opinions. All right, Mark, on to you.
All right. So, I like coming out of this. I think, U.S. energy makes a ton of sense. I think tech is going to be completely unaffected by a lot of the tariff issues because everybody needs big tech. You have to be a little nervous with Amazon and Walmart and some of the U.S. retail. I think that part of tech, if you could see some headlines on e-commerce where they could get tripped up quickly. Now that would be a buying opportunity, but those could totally get tripped up. The other piece I really like are the exchanges, things like SIBO, CME, and generally, I think overall U.S. stocks are still going to do fine, industrials, things along those lines. But for what I'm trading, I think long XOM makes a lot of sense here. No earnings in your way. Had some really decent earnings, unlike Chevron. People look at Chevron and Exxon as two of the same company, but one missed badly, the other one beat. And so I like calls in Exxon. And some recent winners we've had has been on the food retail in Starbucks and in Portillo's, both winners. Ken's asking, is NASDAQ another exchange? NASDAQ is an exchange. That is another one you could do. ICE would be another one. So you could also look like Interactive Brokers. That's IBKR. Those would make some sense from those. And those are my basic ideas. Hans's tariff impact.
Yeah. I like your CBOE idea. I've got some long in the money calls on CBOE, so I'm kind of happy about that, doing well. I think no matter what, cheap entertainment is always a good bet. So Netflix, I've been loving that thing. It's for years. Netflix, Disney to some extent, they may be turning things around a little bit. Amazon's got that entertainment side of things. Anything for me in the AI space that is less physical, so less kind of that intense CapEx side of things, that upper layer, I think starts to do well in light of DeepSeek and the potential for AI for everybody, right? It's like Oprah. You get AI, you get AI, you get AI. Everyone gets AI now because it's going to be cheaper and more accessible. So those top layer software kind of platforms, companies, the Reddits, the metas that can really make use of all this data and all the stuff that really has been built with that physical bottom layer. Really, really good. Uranium, I think, just keeps going. CCJ's had a little bit of trouble lately. I'd like to see it act a little better. It's getting going a little bit today. But I think uranium is a must sort of have in terms of energy, the future of energy. And I think Trump's going to get behind it. I think it's one of those in the power gen kind of theme. I really like that area. Cheap, clean, kind of energy. Costco, of course, have been doing really, really great. Not the cheapest stock in the world, but in difficult times, people are bulking up. I can't even get a parking spot there. You can't even get a freaking shopping cart. You got to follow people around the parking lot. Hey, can I get your shopping cart? So
you're not wrong.
Gangbusters, right? Costco's doing amazing. They keep opening up warehouses up here, so they're doing fantastic. And saving money never goes out of style. So I continue to see that do really well. I think they've got a lot of, they can definitely raise membership rates. You might get a nice special dividend in there at some point. Now, places to be a little wary of, Canadian banks, potentially Shopify for some of the reasons that I mentioned earlier. And if we start to see things kind of get a little bit more dramatic again with Canada, I think you're going to, maybe positioning yourself with some downside protection in the Canadian banks, Commerce, Scotia, kind of an interesting place where you can maybe get a little bit of a hedge in there. And then I'm seeing some options screen really, really cheap, and Netflix is one of them. So kind of I'm liking that very, very much.
There you have it. And here is Andrew's take. What do you got, Andrew?
Hey, how you doing, everybody? All right, let's see. So, things that minimize. So I like these tariff things as rebound plays. I think that's a good one. Things to look for. Safety in treasury bonds. So I'm kind of the buy on dip camp here for treasuries. Could be wrong. Natural gas, domestic natural gas. I think GLG is an exporting vehicle, better for us. EQT, domestic gas. Also, look at 9-day volatility. 9-day VIX is an indicator. Anytime 9-day VIX is over VIX, you got to be a little wary. It's starting to back off today.
We're going to show you a little bit about this in a second, guys. So write that down. 9-day VIX over 30-day VIX. Right.
It's a good little indicator for you to see what's going on. Again, tariffs. If these things go in, they will make Canadian oil more expensive. CVE could be like if they go through, CVE tanks, but if they don't go through, it bounces. That's a shale oil stock from Canada. Oil sands, I believe. XLB is the home builders. Lumber could be more expensive. Again, could be a bounce or a tank. So keep an eye on that one. And in weekly profit cycles here, we closed a bunch of puts, SPY put spreads over the last week. So anyway, things are rolling along in the two-way trade space. And right now, volatility across the board is starting to fade. And it's starting to fade at the money a little more. So the market is getting a little more confidence. And we're only, 1.5% from all-time highs, something like that?
Yeah, less about that, barely.
So, you got to keep everything in perspective here. And with that,
so let's talk about what to look for now. Obviously, we think Mexico and Canada was kind of a false flag. I believe I said this. Deadlines create deals, and that's what happened.
I've never seen politicians move so fast in my life. That is unbelievable.
Well, it's because nobody actually wanted a trade war, and so when both sides want the same result, you can get to a solution quickly. Again, that phone call with Xi, that might be more important than non-farm payrolls on Friday. And in fact, is more important than non-farm payrolls on Friday. So now what we want you, we're going to give you an indicator. All right. This is an indicator. If you want to know what the market is doing, whether the market is in quote unquote turmoil, you want to watch the 9-day VIX, which is pricing options that have 9 days to expire. And you want to watch it trade relative to the standard VIX, which is 30 days to expire. So the symbols are VXD, VIX, N9D, and of course VIX. If VIX 9-day is below the regular VIX, which it is most of the time, that is telling you the market's probably going higher and volatility is probably going to remain calm. When VIX 9-day is above the VIX, that's telling you it is trading time. It is time to jump in. That trading is about to get really good. And get your dry powder ready. So this is what that chart looks like. And you can see most of the time, here's 0 right here. You know, we've only had a couple little instances where the 9-day got above. And those can be opportunities where you can say, I'm picking a bottom and go long. But the issue is you can run into something like this where it's not a bottom and it keeps going higher. And I can show you this number going much higher than any number on this chart, folks. But Andrew, you want to talk a little bit more about how they can use this indicator? Or
yeah, I think the easiest way to use the indicator is this. We do it in pro weekly profit cycles. We kind of always have it on. Trading desk, we've been working on this a little more. So the simple answer is anytime the 9-day VIX goes over VIX, you want to be short-term long vol and long-term short vol. That is the trade. So learning how to set that up, you can do in Trading Desk, Pro. Well, if you're Pro, you get everything. But Trade Desk, weekly profit cycles, we always have it on. You can learn to put that style of trade on.
Hey, real quick. When he says short-term long vol, long-term short vol, what he means is that when the 9-day VIX is over the 30-day VIX, I want to own options that have exposure to implied volatility going higher. So I want to own things like calls, puts. I'm not selling options that are short dated. I'm not selling weekly puts or weekly calls. And then when he says long-term short volatility, what he's saying is 30 days, 60 days out, I want to be selling options, things like iron condors, straddles, strangles, things that will produce income, because the expectation is that near term we're going to move around a lot, but long term implied volatility is going to relax.
Or buy puts and vol products, little longer term vol products.
There's another opportunity. Many ways. He has about 13 dirty tricks to do it in weekly profit cycles, all of which are all tried and true, and have 30 years of trading experience behind it. But anyway, the point is, sorry, I didn't mean to interrupt. I just wanted to clarify what you meant by what you said.
Oh yeah, no, that's good. And right now, so 9-day VIX and VIX are almost back to the same. So what's happened is, like, that short-term vol went crazy on the tariff thing, and now it's just the air is coming out of the balloon slowly. So it's not quite there yet, but it is.
It's getting there quickly.
It is getting there quickly, and I agree with Mark that the beautiful phone call with Xi, the perfect phone call could happen, and everything will be perfect.
Yes. So what we're doing, all right, the 2 ways out of this. All right, the good news is good news caused us to bounce like we did. After that, we'll creep higher. And that's what you're seeing. All right, and that'll happen until we get something that seems more concrete. And we're going to be updating you on executive policy initiatives and how they're going to create market opportunities and necessitate market protection. All right, guys, you stand to be huge beneficiaries of this. If you're not following anytime there's a major market event, this is the place to be, because we're going to be showing up live for you within 24 hours. You can count on that expectation from us because we're going to give you that insight. Now, what I'd like you to do is one, make sure you're always following us right here in Option Pit Live. Sign up for that SMS so that you can get everything we're up to and up to date when we're going live with you guys. And then in this type of trading environment, it's perfect for Alicia's small account challenge. That offer ends today. Sign up, click the link in this chat, and give us a join. So with that, Andrew, you have any closing thoughts?
Nope. I think this will be interesting. Well, we got to look for big tech earnings and see, we got 2 more earnings to go and a phone call. And would it surprise you if we're back at all-time highs by the end of the week if those things go well? It would not surprise me at all.
Yes.
Just saying.
Hans, closing thoughts?
Yeah, look, I think I don't mind these kinds of situations because they bring us opportunity, right? So you can trade stocks, you can trade options, and really what you're doing with both really is you're trading volatility. So as an income trader, I'm always looking to stay out of the storm a little bit when things are getting a little shaky. But for me, it feels like stocks want to go up. The US is still king. We're going to get these knee-jerk reactions to DeepSeek and tariffs and things like that. And that's a chance for us to monetize fear, to monetize uncertainty. And that's where having a group of volatility traders, market makers who've done this for decades is really going to help you. So, our goal is to make you smarter and better at this. So Stay tuned. Like Mark said, tune in every time. You're going to learn something every time. I'm pretty sure of that. And it's going to be great. We're going to keep on taking advantage of these opportunities.
Absolutely, folks. Again, make sure you're signed up for SMS and to be able to join us live when we're doing these, because some of them may pop on the fly. And if you haven't joined Alicia's Small Account Challenge, click the link above me, click the link below me. So for our one and only Andrew T. Giovinazzi, the Viking of Volatility, and Hans J. Albrecht, the Imperial Overlord of Income, I am Mark Sebastian. I am your only option. We hope you have a great rest of your trading day.